Jeff Brown claims he figured out Elon Musk's $10 trillion plan and knows a silent partner of Elon that will explode. I reveal the stock here so you don't have to buy Brown's newsletter. Just keep in mind, no paid or proprietary info is given away in this video, and it's all guesswork based on clues in Brown's publicly available and free sales presentation. Before we do anything, let's look at some recent stock picks from Brown to see how good he is. He recommended Amazon in August 2020, and it's up overall but trailing the market. Also in August 2020, he recommended Nvidia, and this stock is up over 1,000%. Everyone wishes they had invested in Nvidia then. And the last stock he recommended in August 2020 was AMD, and this one is up as well but trailing the market overall. Brown recommended machine vision company Cognex in September 2020, and the stock has done poorly. He recommended the Grayscale Ethereum Trust ETF in September 2021, and this was another poor investment. Let's figure out the stock Brown is pitching now. I'm not really going to bore you with the details of his presentation. It's essentially just about Elon Musk and how investing early in his ideas pays off for investors. Jeff claims he discovered a crucial technology for Elon's ambitions, and he's talking about memory chips. And then Jeff claims, but these are the only memory chips advanced enough to handle all the data XAI needs to process. And Elon isn't the only one who's buying these by the truckload. More than 5,000 AI data centers across the US desperately need massive amounts of these modules right now, because most of those data centers were built before the AI boom. So most of them aren't fast enough to handle modern AI applications. And Jeff Brown makes the claim demand for memory chips are about to explode, and he says, which is why big companies are pouring billions into building new data centers as fast as they can. Meta invested $800 million to build just one AI data center in Indiana. Amazon spent $10 billion on a new center in Mississippi. Microsoft and OpenAI are spending $100 billion on their Stargate data center in Wisconsin. And Musk already has a massive supercomputer called Colossus with 200,000 chips and memory modules. Now Elon's building a second data center outside Memphis he calls a Giga Factory. And this time he's buying 1 million chips manufactured by this one little-known supplier. I'm going to reveal who this little-known supplier is in 10 seconds, but just want to remind you to click the link in the description below to get $50 off Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks is by far the best, affordable, and actually beats the market. The stock being pitched here is American-made memory chip company Micron, ticker MU. Micron Technology is one of the world's leading producers of semiconductor memory and storage solutions. Founded in 1978 and headquartered in Boise, Idaho, Micron designs and manufactures a wide range of products used in computers, mobile devices, data centers, automobiles, and industrial systems. The company specializes in DRAM dynamic random access memory, NAND flash memory, and NOR flash, offering both raw memory chips and integrated solutions. Micron's innovations power everything from smartphones and laptops to advanced AI systems and autonomous vehicles, making it a crucial player. Here are the top 10 things investors should know about Micron, and after I'll tell you if I'd buy. First, we have memory powerhouse. Micron's AI revolution unleashed. Micron is uniquely positioned as one of only 3 global suppliers of high-bandwidth memory, a critical component for AI infrastructure. Their HBM revenue crossed the $1 billion milestone in Q2 2025, while data center revenue tripled year over year. This strategic position in the AI memory supply chain provides both growth opportunity and exposure to AI infrastructure spending trend. Second is, show me the money. Micron's financial comeback story. Micron reported Q2 2025 revenue of $8.05 billion, with expectations for record quarterly revenue of $8.8 billion in fiscal Q3. Their financial metrics show impressive year-over-year growth, with operating income increasing from 3.3% to 22.0%. While the financial recovery shows strong momentum, investors should remember the cyclical nature of memory markets when evaluating long-term performance. Third is tech trailblazer, how Micron stays ahead of the curve. Micron is extending its technology leadership with the launch of its 1 gamma DRAM node, maintaining its position as America's only memory manufacturer. Their product portfolio spans DRAM, NAND, HBM, and NOR memory, serving diverse markets from data centers to automotive applications. Micron's R&D investments and technology leadership position it well for future growth. But maintaining this edge requires continuous capital investment and innovation. Fourth is riding the wave, navigating memory market cycles. The semiconductor memory market is highly cyclical, with periods of oversupply and undersupply affecting pricing and profitability. Current industry dynamics suggest we're in a favorable upswing phase driven by AI-related demand. Understanding where Micron is in the memory cycle is crucial for timing investment decisions. Fifth is battlefield memory, Micron's competitive showdown. Micron faces intense competition in the semiconductor memory market from global giants like Samsung and SK Hynix. While Micron holds approximately 23% of the DRAM market share, competitive pressure from larger rivals can impact pricing power and market share. Micron's U.S. manufacturing base and broad product portfolio provide strategic advantages in this competitive landscape. Sixth is global chess game, Micron's geopolitical tightrope. With U.S. export controls on semiconductors and potential retaliatory measures from China, Micron faces significant geopolitical challenges. The company has responded with manufacturing diversification, government partnerships, and IP protection strategies. Geopolitical tensions create both risks and opportunities, with domestic manufacturing initiatives potentially providing long-term benefits. Seventh is big spender, the price of staying cutting edge. The memory business requires substantial ongoing capital investments, with Micron reporting $3.09 billion in capital expenditures in Q2 2025 alone. These investments focus on technology node transitions, capacity expansion, and R&D for next-generation memory technologies. High capital intensity can limit free cash flow during expansion phases, but is essential for maintaining technological leadership and long-term competitiveness. Eighth is supply and demand, the memory market's delicate balance. Memory supply constraints against growing demand, particularly in AI applications, are creating a favorable pricing environment for Micron. Demand growth is driven by AI/ML, cloud computing, 5G, and automotive applications. The current favorable supply-demand balance supports improved pricing and margins, but investors should monitor industry capacity expansion plans that could shift this dynamic. Cashback, what Micron returns to shareholders. Micron declared a quarterly dividend of $0.115 per share in March 2025, demonstrating commitment to shareholder returns. Their capital return strategy balances growth investments with modest shareholder returns. Micron's dividend yield remains modest compared to other sectors, reflecting the industry's capital-intensive nature. And last is beyond AI. Micron's next frontier opportunities. Beyond the current AI-driven demand surge, Micron stands to benefit from multiple secular growth trends, including automotive, edge computing, AR/VR, and quantum computing. Emerging technologies like Compute Express Link and computational storage represent additional growth vectors. Micron's diversified exposure to multiple technology trends provides potential resilience beyond any single market segment. I personally think Micron is a strong company that I would buy. There are obviously things to worry about because a lot of its business comes from China and there are cyclical concerns in the chip market. However, this company is growing fast, and the valuation isn't outrageous like it is for some other chip and tech companies. I like that the company is based in the US, and with AI and data center growth exploding in the US, I can see demand for Micron's memory chips increasing as well. However, if you are planning to invest, you should learn about the memory chip cycles. This company will look radically different during the bottom of a cycle in terms of margins and revenue. Right now, demand is picking up, so their finances look good. And if you're looking for more stocks that are partnered with Elon, make sure to click this video from James Altucher. He claims these Elon partners could be worth quadrillions one day.